Good morning. We will pay attention to the subsidiary journals today. There are several journals that is used when the perpetual inventory system is used. If there's credit purchases, so we buy goods on credit from the creditors, we will receive an invoice and the suppliers will give the goods with the invoice to us and we will pay them later, and this will be recorded in the creditors journal. If we sell goods to debtors, we actually sell the goods to them and they will pay us later, so we call them debtors. Because when we sell the goods on credit, we will issue an invoice and we will record this in the debtors journal. We have a general ledger where we record the double entry system. So we have a balance sheet section or the financial position section where we record our equity accounts, asset accounts and liability accounts. Then we have the nominal account section where we record all our income and expenses. A creditor's control account is used to record all the transactions in connection with the creditors. So we will take the total purchases or the total returns or the total payments to the creditor's control account. A debtor's control account is used to record the total credit sales, returns or receipts from debtors. So the creditor's control account and the debtor's control account will form part of all the accounts in the general ledger, and that is how we will complete our double entry. Because it is very difficult to draw up a trial balance if all the debtors and creditors are part of your general ledger, a separate ledger for debtors and creditors will be kept. So we actually have three ledgers: the general ledger where you do double entries, the debtors ledger where you record all the entries in connection with your debtors, and you've got a creditors ledger where you record all the entries in connection with your creditors. So the debtors ledger, we will record the credit sales. In the creditors ledger, we will record the credit purchases. The debtors ledger and the debtors control account. The individual transactions of a person or an entity when we sell goods will be recorded in the individual account in the debtors ledger on a daily basis. So at the end of the day, we will record our credit sales, returns from debtors, of merchandise, payments, etc. in the debtors ledger on a daily basis. After each transaction, a balance is determined so that you can see what is the outstanding amount of the debtors. This is very important because this will determine if the specific debtor can buy more goods on credit if he still owes a certain amount of money. There is no double entries in the debtors ledger. For this reason, because there's not double entries in the debtors ledger, the accounting records must be kept in a control system. So we will open a debtors control account in the general ledger. And the balance of this debtors control account must equal the total of all the debtors that owe money to us. A summary of all the transactions is recorded in the individual accounts of all the debtors in the debtors ledger. So every single entry will go separately in the debtors ledger, and then the total sales or the total returns, total money received will be recorded in the debtors control account. The debtors control will therefore be the double entry that we will complete, where we will credit sales and debit debtors control, or we will credit debtors control and debit debtors allowances. So the double entries are done in the general ledger. We can save a lot of time when the trial balance is drawn up. It is possible to check the accuracy in your accounting of the debtors and the debtors control, because the total of all the balances in your debtors accounts in the debtors ledger, so at the end of the month we will take the total of each one in the debtors ledger and determine what is the total amount that they owe the business. At the end of the month, a balance will be determined in your debtors control account in the general ledger. And if there's no mistakes, the total of all the balances will equal the balance in your debtors control account. Then you know that you didn't make mistakes when you transferred information to the debtors ledger or to the debtors control account. We will also open a creditors ledger and a creditors control account. So the creditors ledger, we will open an account for every supplier that we buy from, and we will have an individual account for each supplier. And in this creditors ledger, we will record the credit purchases, returns of merchandise, or payments to creditors. And after every transaction, we will calculate the balance on a daily basis so that we can see what is the outstanding amount, that we know exactly how much we owe the creditors, so that we can take advantage of discounts if we pay within a certain time, or if we pay that we can prevent to be charged with interest. Because the creditors ledger is not a double entry system, we will also have to open a creditors control account in the general ledger so that we can record the total purchases, total returns, or total payments made in the creditors control account. The creditors control account is therefore a summary of all the transactions that we recorded in the individual accounts of the creditors in the creditors ledger. The total of the credit purchases, total returns and payments to the creditors are recorded in this creditors control account, while the individual entries is recorded in the individual account of the creditor, and in the creditors ledger we don't have any double entries. We can save a lot of time when we record the creditors control balance in the trial balance instead of having a balance for every creditor that we owe money to. The total of all these balances of the accounts in the creditors ledger must be equal to the balance of the creditors control account in the general ledger. If it's not equal, it means that there's a mistake somewhere. So you either recorded entries in the creditors ledger and not in the creditors control, or you forgot to record some of the entries in your creditors ledger. What did we learn today? A separate debtors ledger and a separate creditors ledger will be opened that is not part of the general ledger and is not part of the double entry system. So we actually have three different ledgers. The general ledger, where we do a double entry for every transaction, a debtors ledger, where we record the entries of every individual debtor in its own account, a creditors ledger, where we record the entries of every creditor in the individual account. A separate account is opened for each debtor in the debtors ledger, and all the transactions in connection with this person will be recorded in that individual account. A separate ledger is opened in the creditors ledger for every creditor, and all the individual transactions in connection with them will be recorded in this creditors ledger. The debtors ledger represents all the details that will go into the debtors control account, while the creditors ledger represents all the entries that will go in the creditors control account. The debtors control account and the creditors control account are recorded in the general ledger to complete a double entry for the credit transactions.